My feeling is that the whole commodity boom is overextended for the time being, including oil. And what is always interesting is a situation when the price swings become bigger and the market gets more nervous. This is what happened with oil and with silver. And I think silver and oil especially suggest to us that the commodity boom could be over at least for this year, or at least over the summer month. And if this is the case, gold would suffer a little bit, but much less in any case.
Yeah.
And especially in dollars.
Yeah. The accumulators will continue to accumulate gold on any pullback. I guess the silver and the crude oil market have been hit by the margin increases, so it's really the paper market here driving prices lower. Would you agree with that, rather than fundamentals of underlying demand?
Yes, you are perfectly right. I mean, it would have happened anyway, even without higher margin requirements. These markets just were overextended. If you look at the commitment of traders in oil, for instance, was it not? That was higher than in 2007 and 2008. So what really even gold investors must know, there are two sides to these markets, even to the gold market. You have an investment market, you have serious buyers, serious investors who just want to have something in their portfolio which can't go bankrupt.
Physical metal.
Yeah, as an alternative currency, which really it is an alternative currency. But then you have these people who play games, like hedge funds and other operators who don't buy gold in order to keep it. They buy it in order to sell it at higher prices.
Yeah.
And this creates a kind of foam, foam layer above the market. And periodically, the foam has to be taken away, at least partially. And then you get, and this is what makes the market cyclical, and then you get a new buying opportunity.
Yeah.
But summing it up, I mean, the whole gold story is not near its end, because when I started in the gold business and writing about gold, that was in the second half of the 70s. So I saw this whole gold, I lived through this whole gold bull market then, which really ended in January 1980. And actually, it sounds preposterous, but I mention it nevertheless. I sold everything I had exactly on the day after the gold high, 850. Not because I was particularly very clever, but because the newspapers were so exuberant. I remember one newspaper really was decisive for my selling. They wrote, it was a big German weekly, and they said, from now on, and that was when gold was 850, they wrote, the gold price will keep rising by leaps of several $100s. Not rise by several $100s, but by leaps of several $100s. So I sold everything. And really, looking at what happened at the banks and everywhere, I know we are not in that kind of situation now.
We still have a few years to go, would you suggest, or
yes.
3 to 5 years before this bull market ends, or perhaps?
Yes. Yeah. It's hard to say, but what can happen? But I don't know, of course. But what can happen if we get for a certain while a stronger dollar, because the euro is even worse off, and the yen and all of them. So the dollar price of gold could go down somewhat, and normally it would go up again in August or September this year. But what can also happen is that it takes 9 months or even a bit longer. I remember, yeah, when we had, during the gold bull market in the 70s, we had suddenly, from the beginning of 1975 till August 1976, it went down, nearly, I think, down to $103 in August
That's right.
76. But after that, the fun really started.
Yeah, it just kept going.
But then, but in the summer of '76, many people were out and didn't re-enter the market until much later.
Yeah.
So normally, you have this kind of pause or interruption, which we haven't had.
Mm-hmm.
What is really, I find sensational, that since 2001, we hadn't had 1 year with falling gold prices.
Mm.
Every year was in plus. But this is exceptional.
Yeah, it truly is. That's why, you know, it's always useful to make comparisons back to the 1970s, and I myself, you know, do that quite a bit. But I also say that this time it's different than the 1970s, like you say.
It's worse.
Yeah,
Yes,
it is.
worse.
The currencies are worse. The debt load is worse.
Yeah.
We have this mountain of derivatives out there. And while bull markets end with a lot of enthusiasm, normally, my thinking has been this time around, this bull market's going to end slightly differently, in the sense that when it comes to an end, you're not going to be selling your gold, you're going to be spending your gold. In other words, I think gold is once again going to return as currency, rather than actually wanting to sell your gold and dealing with a national currency instead.
It is possible. Yes, it is possible.
Should be interesting the next few years.
At least
ahead.
it's not yet in a real bubble.
No, that's definitely for certain. Well, Bruno, it's been a real pleasure to speak with you, Dr. Bruno Bandelay. Thank you very much for spending some time with me this morning.
Not at all.
Thank you.